What's good, and welcome back to Investing with Jax. If you get any value out of this video, please smash that like button, subscribe, turn on notifications if you're new, and if you'd like to stay up to date with each and every stock we talk about on this channel, join the Discord. It's completely free for the first 1,000 members. All right, guys, so today we're going to be talking about Sundial, Hexo. The financial reports have recently been released. We are going to do a very quick overview. We're not going to do a deep dive into the reports, just a quick overview, as well as some of the catalysts, as well as my opinions on the futures for these companies and if they are good investments, as well as a little bonus stock that a lot of investors are completely sleeping on right now, in my opinion, which I will talk about at the end. So first, we're going to talk about Sundial, ticker symbol SNDL. So we'll quickly go over the financial overview for the fourth quarter and the fiscal year. So for the fourth quarter, Sundial reported revenues of 16.9 million. That's Canadian. An increase of 4% year over year, ahead of analyst consensus estimates of 11.1 million. The company posted a net loss from continuing operations of Canadian 64.1 million compared to a net loss of Canadian 71.4 million in the third quarter. For the year, gross revenue increased by 10% to 73.3 million over the previous year. Net loss from continuing operations from 2020 was 206.3 million in 2020 compared to 142 million in 2019. Now, everyone was quite surprised by Sundial's earnings. Most people thought they were going to be a lot worse than they ended up being. So this is good news for investors, and I believe we saw an 8% spike in Sundial after this was released. So a couple words from the chief executive officer of Sundial. His name is Zach George. I wanted to go over it. I think it is important. So he had to say, "We entered our second year of commercial operations facing a number of internal and external challenges, including operational difficulties, excessive leverage, inadequate cost control, a lack of focus on our core value proposition, and rapidly evolving industry conditions. In response, we redefined our strategy and made material changes to position Sundial for improved performance. We successfully restructured the entire organization by repaying all outstanding debt, improving our operative practices, targeting a sustainable cost structure, and a simplified business model." So yes, so I actually have it written down here. Sundial shares rose 7.1% to $1.65 after hours. So they are up almost 250% year to date. Of course, part of that was Wall Street bets, but also Sundial is showing us that they have a lot of long-term growth potential, and that is why I am still bullish on this company. So on Monday, Sundial shares shot up as the company announced it had formed a joint investment venture with SAF Opportunities. So that was one of the most recent catalysts. So with that joint investing venture, as well as some of the previous catalysts, the previous investments, the previous collabs that I will quickly go over, I have done it in previous videos, I believe that a lot of investors are now believing in Sndl as a long-term play, which is a great sign for this company. As I mentioned in previous videos, they closed the deal, the $22 million investment into Indiva. They have the collab with the brand Chocolate. They have a 50% equity in Pathway RX, and they have been solving issues with their cultivation performance. So I still believe in Sndl as a solid long-term play if you are patient enough to give the company time to grow, as well as the continuing legalization across the globe. I think it could be a heavy hitter in the cannabis industry. All right, guys. So next we will be talking about Hexo, ticker symbol HEXO. So they also released their financial and operation highlights. So I'm going to quickly go over some of them. They were very positive in my opinion. I was quite impressed, and they threw a little bit of shade in there towards other companies, which I thought was hilarious. So I'm going to go over that as well. So they achieved a positive adjusted EBITDA along with the 7th consecutive quarter of adjusted EBITDA improvement. Their total net revenue increased to 3.28 million, up 94% from the prior year quarter, and 12% from the first quarter of the fiscal 2021 ended October 31st, 2021. Their non-Canadian adult use revenue increased by 72% in Q2 Adult use net revenue increased by 10.5% in Q2 2021, making it the 5th consecutive quarter of growth. They maintain the #1 position in the beverage category with a net revenue increase of 11% in Q1 2021 and operational cash use of $2.9 million for the quarter and $8.1 million over the past 3 quarters combined, not including non-cash working capital items. So I quickly wanted to go over this little bit of shade that they threw out there. I found this quite funny. I'm sure it was important to mention this, but I had a good laugh. So due to Hexo's ongoing success, the company has never qualified for the Government of Canada's COVID-19 related emergency response program, such as the Canadian Response Wage Subsidiary. Controversially, several of the competitors have received tens of millions of dollars, all of which has been included in their operational cash flow. So basically what they're saying is the reason that some of these other companies have a positive cash flow, have a very high cash flow, is because of the COVID relief plan, the government giving them money. So Hexo is saying, we didn't have that, we were good enough that we didn't need it, and we still did well. So, you know, fuck you. Basically, that's what I got out of it. So I wanted to quickly go over some of the words from the co-founder. What was his name? St. Louis? What was his full name? I don't believe it. Have it on my screen. Okay, so we're going to go over some of the words from the co-founder. So he says, our continued focus on delighting consumers has seen us increase our market share across Canada while maintaining the #1 position in Quebec. We are also very excited to have launched Powered by Hexo CBD beverages in Colorado. Our net revenues and gross margin have continued to improve year over year, bolstered by our premium product mix with the relaunch of Up Cannabis. We are especially excited about our recent announced agreement to We believe this transaction will be assertive for our shareholders and will position Hexo for accelerated domestic and international growth. The acquisition would place Hexo solidly in the top 3 position among licensed producers for Canada's adult use cannabis sales, based on the most recent interim quarterly financial statements. So Hexo did quite well with their financials. They beat the analyst estimates, which is a bullish sign. Some of the recent news, their class action lawsuit was dismissed in its entirety. So that's obviously very positive. In January, Hexo Corp and Molson Coors joint venture launches Very Well Sparkling CBD water in Colorado. So I also looked over some of the institutional ownership, and you can see the buying in green and the selling in red. And as you can see, there is quite a bit of both, but there is more buying. So that's something to keep in mind as well. So I don't currently have a position in Hexo. However, after this financial report and seeing some of the moves that they're doing, I may take a position, but I'm going to watch it for a little while and see some of the news that comes out, see some of the upcoming catalysts, and then I may take a position. But for now, it's going to be on my watch list. So now I wanted to end the video with this bonus stock, this stock that I believe a lot of investors are sleeping on and could be a juggernaut in the cannabis industry with some major catalysts coming up. So this is Cresco Labs, ticker symbol CRLBF. Now I made a video on this a few days ago. If you want a deeper dive, you can check that out. But we'll do a quick little overview. Cresco is one of the largest vertically integrated multi-state cannabis operators in the United States. Today they announced the acquisition of a definitive agreement to acquire 100% of the outstanding equity interest in Cultivate Licensing and BL Real Estate, a vertically integrated Massachusetts operator for upfront consideration equal to US $90 million plus an earnout of up to $68 million. The transaction is expected to close in the 4th quarter of 2020. So Cresco Labs will immediately vault to a top 3 share position in Massachusetts, the 3rd $1 billion plus cannabis market where they've achieved this status. So this company is expanding extremely quickly. If you look at the last video I posted on that, I'll leave a link in the bio. I talk more about their expansion, and they also have great financials. So in the recent 3rd quarter, Its top line jumped 323% year over year from 36.2 million to 153.2 million. Its revenue comprises of two segments: wholesale, which contributed to 59% of the total, and retail added the rest. So Cresco has a very large market presence in the US in many different states. They are holding licenses for 15 production facilities and 29 retail outlets. Cresco took advantage of the sizzling new marijuana market in its home state of Illinois and opened 2 new stores that led the highest retail revenue. Illinois legalized recreational marijuana on January 1st of last year, and sales across the state have been sky high, with the total legal sales touching 1 billion in the last year. Now, this is very important because the major catalyst coming up for Cresco is New York passing the bill for legalization. So we are going to see what's been happening in Illinois on a much grander scale when New York passes the bill. If they pass the bill, I do think it's going to happen, but it's not 100%. All right, guys. So the company has obtained 4 New York dispensaries, and they have the right to operate 1 cultivated facility via the acquisition of Valley Agricultures. The dispensaries have recently been rebranded to the Sunnyside retail brand. Unlike most SEOs, SEO means multiple state operators, Cresco Labs is more focused on the wholesale market. The company gets over 50% of its revenue from wholesale, but the key retail stores located in the large states like New York will provide substantial revenue upside. So there is massive room for growth, especially if New York passes this bill, and we could see some short-term growth potential with this company. It is a great long-term play, but this could be a good swing trade opportunity. So I think it's a great time to buy in this $12 to $13 range. As you can see, the analysts are very bullish on this company, and I think it would be a crying shame not to get yourself invested into this company before all this starts to happen, before New York passes this bill, and also before the upcoming catalyst, the long-term growth. I think at $13, it's a great opportunity to buy, and a lot of investors are just sleeping on it right now. So that's it for this one. I hope you guys enjoyed it. If you did, smash that like button, subscribe, turn on notifications, join the Discord, and I will see you in the next one. All right, guys, much love. Take care. I need some water. Goodbye.